Welcome to Business. Owen Fairclough is back with me in the studio. Owen, the best finish of the week so far in Japan. So how are European traders feeling this morning?
They can't beat that just yet, Rebecca, but hey, it's midsummer. Nobody really wants to be trading when the sun's out. It's hot. People really want to be at the beach, and I think the markets are showing a little bit of that sentiment right now. The FTSE, though, just opening a fraction up, as is the DAX. You can see there the CAC 40 here in Paris, pretty flat after a bank holiday here in France on Wednesday. But as you say, Rebecca, the Asian markets had a much better day, or at least the Nikkei did, finishing the day nearly 2% in the green. That is its best finish, certainly in the last 5 days or so. Investors sitting out a little bit and wait and see whether the Chinese government will provide a little bit more stimulus for the economy after some very sobering words from the government. We'll have more on that in just a moment.
Now, Facebook shares have opened 0.5% up on its German listing from today. Potentially millions of new shares will hit the market as preferential shareholders are allowed to sell their stock. But there's little motivation to do so right now. Facebook has lost nearly half of its value since a calamitous flotation back in May.
Since Facebook listed in May this year, investors have been rapidly defriending the company. And on Thursday, CEO Mark Zuckerberg could lose even more as the first so-called lock-up on sales expires. Early investors and a handful of directors will be allowed to sell off more than 270 million shares. Like many initial public offerings, Facebook's debut included a lock-up agreement that requires some shareholders to keep their stock for a certain period. The reason for this is to prevent a stock from experiencing volatility that might occur if too many shareholders decide to sell a newly traded stock all at once. But even the lock-in hasn't helped the social network's success. On May 18 this year, Facebook made it into the history books, becoming the largest listing ever and one of the worst performing. Stocks have plunged almost 50% from their original listing price of $38 per share. On Wednesday, the stock closed at $20.20. But the poor performance is likely to put insiders such as Goldman Sachs and Microsoft off selling. And analysts predict the big stock dump could come in November, when many of the social network staff will be eligible to sell.
Well, of course, we'll keep you updated with those Facebook numbers when the New York markets open later this Thursday. Let's get a bit more of the day's business news for you now. China has described its trade outlook for the rest of the year as severe, one of its bleakest forecasts yet. The government is concerned about the economy's rapid slowdown. Exports to its biggest market, Europe, were down 16% last month, and foreign investment in China has also fallen by 8%.
7 of the world's biggest banks have been subpoenaed over the LIBOR scandal. Those summoned to talk to the New York attorney include Citigroup, Deutsche Bank, JP Morgan and UPS. Barclays has also been named. It's already been fined nearly £300 million for rigging interbank lending rates.
And finally, how about this for a last stand on real estate? The entire US town of Garryowen in Montana is up for sale. The town has just 2 buildings and just 2 residents, so not perhaps much of a town by European standards, but it was immortalised in history as the location of the Battle of Little Bighorn and General Custer's last stand against the Sioux and Cheyenne Native American tribes. Bids start for this auction at $250,000.
Sounds like a snip to me.
$250,000 for a town, yeah, and a bit of history.
Not bad. But only 2 residents.
7.7 acres, Rebecca. It has a fast food restaurant, a shop and a post office, so you can have all that for $250,000.
Total bargain. Thanks very much, Owen Fairclough. That was your business news update. Stay tuned to France 24.